The most consistent thing is that these are people that are voracious learners who are willing to take calculated risks, and they're they look for things that are wildly different than what other people do. They don't look for verification that, oh, this must be the right way to do it because that's how everybody does it.
Hey guys, so today we have an incredible guest with us. We're fortunate to have a leader in the ultra wealthy investment space. His name is Richard Wilson. From helping create over 100 family offices to running the largest community for investors with over 140,000 members, his expertise is like none other. So we'll dive into how he built his empire, his insights into scaling wealth, and how new investors can learn from family offices. So, hey, Richard, welcome. Thank you.
Yeah, appreciate you having me here. Thank you.
Yeah. So, Richard, let's get a little bit of your background. Like, can you take us back to the beginning? Like, what first drew you into real estate and investing?
Sure. I grew up around my father raising capital for nonprofits like hospitals, universities, etc. So I'd go with him where he pitched donors on donating, $3 million or $250,000 to things. And so I saw that, and that opened my eyes to the investment world a bit. I then started 5 or 6 businesses through grade school, middle school, high school, and college. Learned a lot, learned what it's like to work hard on something that no one cares about at all. And then I got into the capital raising world, and I just realized that nobody was helping me contact family offices. No one is helping me understand them. Almost no one is writing about them, except for some journalist from the Financial Times who had never worked a day in their life in the industry. So I started a blog, and then the blog took off. We started speaking at events, and then we started hosting our own conferences for our investor club after that.
That's amazing. So, tell me, what are some of the biggest challenges you faced when building your family office club and investorclub.com? And, how'd you overcome them?
Yeah, some of the biggest challenges are that family offices are relatively private. They don't like to go to tons of conferences. They don't have to put out capital if they don't feel like it. They're entrepreneurial. They're under the radar. Many times they're soft-spoken and relatively humble. So at one of our conferences, somebody might go around networking and they're looking for an LP investor for their next deal. And they might be like under pressure to raise that capital. So they go around shaking everyone's hands and saying like, are you an investor? Do you have money? And then people get turned off by that. And so some of the best investors in the room may be someone who does not look or talk like they're the wealthiest. They might not have a huge gold Rolex, might not be beating their chest and walking around like they're king of the world. And when you ask them, oh, what are you here for? They might say, oh, I own a couple dry cleaners, or I own a couple car washes, but maybe they own 50 of them. Maybe they just sold 100 of them to Goldman Sachs, right? And so that's one of the challenges of our space, is that a lot of wealth is invisible. And when you try to get together in a community, convincing them to trust us to come, and then explaining how the industry works to people outside of it, that's probably like a core challenge of running our club.
Oh, wow. That's incredible. I really like that. There's a lot of people that have money that you wouldn't know have money because you just don't know. The stigma is like you're flashy and everything, but most people are not like that. So that's incredible. Right. I know you've interviewed billionaires like Mark Cuban. Like, what was one of the most pivotal moments that you had in your journey when you realized the power of networking with high net worth individuals?
I think it was when we started not just speaking at other people's events, but hosting our own events. And I would have families that are worth 50 million or 100 million come to the event. And they would say, well, Richard, the real business here is the relationships in the room. You can make money off of selling event tickets or a membership. But the real value is the strategic value of what you have here in the room. And so that really opened my eyes to that potential. Yeah. And then for 12 years, we tried negotiating the purchase of Billionaires.com, and we finally got that 2 years ago. And so we're interviewing 100 billionaires publicly, and we're trying to kind of match Napoleon Hill's level of, documenting what billionaires do to scale, how they think, their mindsets, and all of that.
That's amazing. That's incredible. Wow. So for those new to investing, how would you describe the role of family office and its importance in the real estate world or in the industries?
Yeah, importantly, family offices are just founders and entrepreneurs that have won the game of capitalism on some level, scaled to some significant level, and essentially are ultra wealthy at this point. So they need different investment solutions. And it's great to network with them because you learn about how they scaled, what structures they're using, but also one family office relationship can be transformational. Maybe a strategy they give you completely changes your real estate portfolio. Maybe an access to debt they have. Maybe it's access to equity balance sheet or lending. All these different things can result from just one relationship. And we've seen people go from 30 million to 150 million in assets. They have all the capital provided by a single relationship along the way. And it can be transformational, truly. So I think that's something that people miss often, is that when you're raising capital 50K at a time, it's like it can be a slog. But if you raise a $40 million check, it's equal to $400,000 investors. So, it's just something to keep in mind, right? $10 million check from one investor is equal to closing 100 small investors. So that's a really important point.
What are the 3 strategies you'd recommend for someone raising capital for their first real estate deal?
Sure. One strategy is to start local. Investors will invest more quickly into something if they can walk the property, meet you in person. The trust goes up 10 times faster. And that's even more true in 2024 because we're in a world now where AI means that anything can be faked. And people don't believe anything unless they see it in person for their own eyes anymore. So it's even more important to focus on local investors to your deal or yourself. Another strategy is to be a better, more concise, clear communicator. So you want to make sure that you have a one-liner, that you have a 3-minute video from you as the founder explaining your strategy, that you have a one-pager. Most people just have a long pitch deck that's, overly long and people don't read the whole thing. So a one-pager, a one-liner, and a video, that's really critical. That'd be the second strategy, superior communication. And the third one is just to focus on navigating the 3 trust curves of, does this person understand your industry? Do they trust you already? And do they trust the deal? Figure out which one of those 3 curves you need to move somebody up in every conversation. And then that's how you can get more deals done.
Okay, that's incredible. I can tell you have such a wealth of knowledge on this topic. So you've helped create over 100 family offices. So can you share a case study of one family office that particularly stands out about how they approach real estate investing?
Yeah, sure. So we're working with a couple right now. One is a 500 million in revenue agricultural company. One is a company about to have an exit in the pool maintenance pool industry. I would say one that stands out would be a billionaire family we worked with because it's an extreme example. It took us 6 years to build the trust to get a single deal done, and now we've closed 19 deals with them. And so it's just an example of sometimes, teak wood takes a long time to grow in the forest, but it's the hardest, one of the most expensive woods that's out there. Other times we've met someone like this real estate family out of Los Angeles. I met via our YouTube channel, father and son. And with them, they had consumed content like your podcast here, this type of content, learned to build trust via the content and the thought leadership funnel we had. And because of that, they put a 7-figure check into real estate, within 3 months of meeting me, right? And so I think that it can go both directions. You have to be doing things for the long term, but it can go very quickly. And the insight on the real estate side is just that these are entrepreneurs, they're founders, probably very much like you if you're listening to this podcast, and if you're a syndicator or a sponsor CEO of a real estate firm. And so when you're writing checks for $500,000 or $1 million plus, unless you're investing with $1 billion plus platform, you sometimes want special treatment or a creative structure, or just want to feel high conviction about it as an entrepreneur.
That's incredible. Yeah, that thought leadership is very important. Let's talk about risk. So it's always a factor in real estate, So how do you advise investors to manage risk, especially during an uncertain time?
Sure. I'm about low debt. I like to get seller financing on everything versus using bank debt. So we have 4 different real estate assets right now that we got seller financing on. And those were done before all the interest rates went up so much, most of those, back when debt was pretty cheap and we were still able to get seller financing. I'm also not a believer in high leverage. I like to sleep at night. I'd rather have moderate returns rather than try to shoot out the lights, but risk things blowing up. I see a lot of people melting down right now from having 70 to 80% debt on things or higher. So we sleep very well at night, knowing we've got 23% LTV on our properties and all of our seller financing will be paid off in 3.5 years on our real estate assets. So I'm conservative to a fault in that way. But one recommendation I would have to people listening is that if you're not getting momentum, try to niche down further and be laser focused on where the future growth is, or laser focused on where you can make the most money, or laser focused on where you have a big advantage. A lot of people who don't get momentum, it's because you're offering something that looks like everybody else, but your company is not as big, or you don't have as much of a track record. So why would they ever invest with you, really? It has to come down to trust or some edge that you have in the marketplace.
Yeah, that's incredible. So you mentioned that you get your you like to structure your deals in as seller finance deals. Where are you typically getting your leads from? Your property leads from?
Yeah, sometimes we will just see an asset on the marketplace, and then we'll look up in the county records or send them an email and just approach them directly. Other times we'll get the leads via MLS, but we'll approach somebody who's been on the market for a while, gone through a broken sale or two. And because of that, they're more flexible on the seller financing. Also, sometimes people get beaten up on pricing, and if you can give them a good price, as long as they do seller financing, they could be good for both parties potentially.
Yeah, that's incredible. Are you typically structuring, low equity seller finance deals where like you come in at 5 or 10%, or are you coming in a little bit higher than that to get the deal done?
Yeah, so we're usually putting down, 66% of the capital, sometimes 75%, and then we'll get 25 to 33% seller financing. And we're typically getting 5% and change for interest rates. Sometimes we'll get a balloon payment schedule so that a property can be renovated and then there's a balloon payment later. Just depends on the deal.
Okay, that's amazing. Yeah, that's very low risk.
Yeah.
Yeah, wonderful. So let me ask you about more interviews with billionaires. So
Sure.
What mindset or strategy have you found to be the most consistent in terms of scaling wealth?
Yeah, the most consistent thing is that these are people that are voracious learners who are willing to take calculated risks, and they look for things that are wildly different than what other people do. They don't look for verification that, oh, this must be the right way to do it because that's how everybody does it. They know that if that's the way everyone does it, it's at best average, and you might not even do it as well as everyone else is doing it. So you might be slightly less than average. And so if you try to innovate too quickly, you don't even know the lay of the land and how people want you to innovate. But I see over and over again that they are drawn to, like David Rubenstein and Mark Cuban and Ted Turner, Richard Branson, and dozens of other billionaires. They're drawn to and they lean forward on things which break the current mold, disrupt the whole industry, just like Peter Thiel says, that, competition is evil. And Sam Zell, a billionaire in real estate, said that he prefers a monopoly, but he'll settle for an oligopoly. So basically, it's like he wants to have a unique space and get there first and be bold enough to do things in a totally different way. So I think that comes up over and over and over again, so much so that it's become really ingrained in my psyche now because I'm only reading books that are written by billionaires right now.
Wow. Okay. So yeah, that's incredible. So, meeting all these billionaires, and you talked about all this, the relationship game, which you said, going to the conferences, meeting all these people, that is actually what is the value in it. What are some of the things that you do in order to build relationships with people, to get
right
to do deals with them?
I try to have like a tool chest of like 7 different ways that I could add a lot of value to somebody before they spend any money with me or take any risk of signing a contract. One way is that out of the 1,000 YouTube videos we have on the Family Office Club channel, we have under playlists some mini series. We have like a mini series on how to start a family office, a mini series called the $100 Million Rainmaker series for capital raisers, et cetera. And I tell people there is far more than $100,000 of strategies there within those 14 or those 17 episodes. So if you're not sure if you should join Family Office Club or not, go watch those, download 100,000 of value, and it's going to make a membership look like negative cost. It's like it's more than free because you just got so much value at no cost. So I try to do stuff like that, like de-risk the relationship, because other people don't owe you their time. They don't owe you anything. And I'll do something like buy 500 copies of the Billionaires book to get them to answer 3 of my questions, or I will help their son or daughter with an internship or connecting with another client or a peer family. Or my favorite one is to give a founder, a CEO, or someone who's ultra wealthy a strategic choke point idea or a investment structure that could make them millions of dollars. And then they lean forward and they say, wow, that's one of the best ideas I've heard for a while. And then they know that I'm not there just to sell them something and take. And I think that that's the key to building relationships, is like you have to add value first and say something unique and build that unique tool chest that's, related to your DNA and your background, whether you're an attorney or a dentist or a, whatever your background is before you got into real estate, if that's where you're focused on.
Yeah, that's an incredible thing. Add value first.
Yeah,
that's very, very important. So let me ask you this. So what's one lesson that you think you can apply or give to someone that is from the ultra wealthy that you think can help someone starting out in real estate?
Sure. Yeah, I think that many people think of investing as just a diversification game because wealth advisors are supposedly the experts on investing, but wealth managers play one song and they beat the drum of diversification, and that's it. And it's like the same tune every time we talk to them. And that's great because everyone needs a defensive play, mass diversification, et cetera, in their portfolio for part of their net worth. But founders and entrepreneurs know that they need to focus to build wealth. And sometimes the best defense is a good offense. And so we always encourage families to have their defensive stock market diversification bucket, then their real estate bucket, and then a niche of 1 or 2 areas where they grow their wealth most aggressively, usually where they created their wealth in the first place. But if we look at bucket number 2 on real estate, related to your question, we encourage families to say to themselves, okay, the real estate universe is broad, right? Am I going to invest in data centers or healthcare real estate or storage? There's, a dozen different food groups you could focus on. So at the beginning, start with 1 to 3 food groups, figure out what 2 to 4 states or parts of the country you like best, and then say, okay, for the next year, let's meet with 30 people in RV parks, 30 people in storage or senior living, whatever it is, the 1 or 2 niches. And after looking at 30 or 100 apples, you're going to be able to see, oh, this apple looks better than this other one. This is much more credible. This is unique. These guys say the same thing as the other 29 storage groups we talked to. And then you can start to sort them out and become much smarter, much faster by saying, we're just going to focus on these 4 states and these 2 real estate food groups. And then you move up those learning curves very quickly versus like, yeah, send us anything. Look at any deal. You do whatever you want. It's your money, but, families learn faster by focusing,
That's amazing. So you preach that the focus is very important when you're trying to scale.
Yeah, for sure.
Because, diversification, can spread yourself too thin and you can become a jack of all trades and master of none, right?
Yeah, on 2 levels, right? So if you're an investor, I think that part of your portfolio should be playing offense for you. Even if you're retired, you can invest passively in dentistry if that's where you made your money, or passively into real estate, but focus on 1 or 2 types of real estate in 4 or 5 different states or 1 or 2 states, right? So for an investor, there's a value of focusing there. But then for people raising capital, if you're a sponsor or head of an investment platform, you're going to look like everyone else, but just be far less credible if you try to do everything and you're at a small level, right? Like Amazon, Bezos says this up all the time. He says at the beginning, they just nailed selling books on Amazon. They didn't start out trying to sell 10,000 things, right? And so you start with a niche, scale it, and then once your airplane can glide, then you can put a jet engine on it and, go faster and do more things.
That's incredible. So let me ask you a little bit about, the kind of deals that you're doing. So what kind of asset types are you focusing on, and I guess why have you picked those against others?
Sure. We're always keeping an eye out for something that's really niche. So, for example, we're looking for an amazing sponsor in the gas station niche because they have a lot of corner pieces of real estate. And we just don't see many people doing a lot in that area in general. We currently like storage a little bit more than multifamily, but we know that everything is market specific, right? Like in some states, you can add ADUs and additional units to multifamily properties now that weren't allowed before. And you can goose up the value of the property quickly by, converting extra space into extra units, and you don't need to worry about parking anymore in some states or counties, right? So it's really specific to the strategy, but the more niche, the more unique, the more high conviction, the better. And specifically, since I'm based out of Hawaii on the island of Oahu, we're looking for properties with acreage on them around here, and properties that are waterfront as long as they have erosion control measures in place, or we could put them in place. So we're looking for those types of unique opportunities. And many times it's a family who's owned an asset for a long time, but they haven't really capitalized or developed it. So it might be like a family legacy asset, and it just needs an injection of capital or repositioning, and then they would get much more out of the asset long term.
Okay, gotcha. Yeah, gotcha. That's an incredible way. Yeah, there's a lot of families that have real estate that they've held since the 1990s or something that has appreciated incredibly well throughout the past 20 years. And so something like doing a land development deal could be really lucrative for both the family and whoever,
Yeah.
if you're doing that.
Yeah.
So,
for sure. Sometimes it's as simple as there might be a farmhouse on a property, but perhaps they'd be allowed to put down 3 tiny homes and reposition it for weddings, even if it needs to stay as one property and the property lines can't be divided into separate tax lots. It can still be developed into more of a wedding venue type property, et cetera. So just being able to navigate things like that and have boots on the ground to put that in place is something that many families don't want to bother with, or just don't have the team to do it.
Yeah, that's incredible. So let me ask you this. I've talked to a lot of people about this, and some people have their perspective on this, that there's the capital raiser, there's the hammer, there's the brain, and then there's the hunter. These 4 different types of people all operate in the team, and they usually say you should specialize in one of them. And so based on your perspective and your knowledge, and what do you think? Do you think that applies? Do you think people should seek out to do, finding the deals or underwriting, or, doing the capital raising, or actually doing the property, the asset management? Or do you think that someone can go out and be, all 4 and, want to be that unicorn,
Right. Yeah. I mean, I think that I see many tech founder VC type people saying you need like the inventor, engineer type, and then you need like the leader visionary type, and they split it into 2 groups like that. But obviously if you have both, then it's more powerful. I don't think that you have to have 4 different partners for sure. I think that many times people think they have a great idea, but they have no idea how to raise the capital, and they overlook that as such a critical component. If you don't have the capital, then you're not going to be able to execute on your idea. But if you're only going to have one, it would be how to get an asset, force appreciation so that you can sell it for more. Because if you do that, even if you have to do it on a tiny level, then investors will like that, and then you'll get another deal done, and you'll get another deal done, and it'll grow organically. If you raise capital and don't have the goods to force appreciation to an asset, then you're just going to lose people's money or break even, and it's going to be a frustration, and it's not going to work out too well. And so I think that forcing a value and forcing it to go up, obviously is critical, like the most critical. And it's what investors are seeking, really, not someone who just rides on momentum or can raise a bunch of capital, because over a medium term and short term, you can hide mediocre or bad returns if someone's good at raising capital. But in the end, it's the ones who are forcing appreciation who are going to do amazing.
Okay. Yeah, that's a great answer for sure. Love it. So let me ask you about you know, this current time. You know, right now we're experiencing some very high interest rates. I think the rates have dropped down a little bit, but there was a lot of talk that there was going to be a lot of, properties going to be, hitting the market because they were going to have to refinance or sell and they weren't going to get the price. And so, what do you think is happening right now, or what's the next opportunity, in the future of real estate when it comes to, investing, with family office investing or
Sure, sure. I think that there's a lot of uncertainty right now, so it's harder to raise capital than before. And because of that, those who can raise capital are just getting better deals done right now. I see like rescue capital deals getting done. I see assumption of debt deals getting done. So they're assuming somebody's debt at 3.8% over 30 years, et cetera. So those deals go through. I think that right now and going forward, there is a hesitancy of investors to invest large amounts in people that haven't invested in before, or haven't met in person with. And so a lot of people are finding that they're only raising 25% or 20% of the capital they used to raise with the same amount of effort. And so that meeting in person, taking them to the assets in person, turning down deals unless they're amazing deals, is something that I think is even more important right now. And credit offerings are seemingly growing the fastest. We have one manager that is within our club, and they were at 600 million a year ago, and they're now over $1 billion in assets, and they think they're going to quickly grow to 10 billion because of the demand out there for credit. But if that's not something you have a track record in, the capital is going to be flowing to those who have been working on that for 5 or 10, or in this case for 30 years. To get to $1 billion in AUM. So if you're always chasing the latest trend, you're going to be trailing behind the leaders in that space, obviously,
Yeah. Yeah. Let me ask you something. How do you do research on different industries? Like, for example, you mentioned credit. I really haven't heard a lot about that. I'm in the real estate space, so it's kind of like a different thing, but it's related. And I wonder if there's more out there that are like that are, different that people, can get into that they just don't know about.
Right. I mean, another way to talk about credit investments is like a debt fund or hard money lending or bridge loans, et cetera, where people are getting, 11, 12% returns after fees, or 10 to 12% returns after fees. And usually the money is lent out at 12 to 14% plus a couple of points, et cetera. Just depends on how big the amount is. If someone's borrowing, 50 million or 20 million, the rates come down obviously quite a bit. But that's one area. But this space is really, inefficient. It's hard to navigate. Information is not shared openly oftentimes, and that's why we host our investor club events. At one event we have coming up, actually the next 2 events, both of them have 120 speakers on stage over 3 days. And you're hearing about strategies and structures and frustrations and what they wish people said and what they're looking for in real estate and what they think is going to happen with inflation and interest rates and all these different things. And so by the time you leave, you've grown your conviction in a few things. You maybe got a couple new ideas, a couple new contacts to follow up with, and your brain has kind of been refreshed by like a view of the forest of what all these 120 people just said. So that's how we use our events. And I script every discussion panel question myself based on what I'm curious about, so that when I go to my own events, I'm not bored after going to 300 of them now. And that we're always trying to get like a bit sharper over time. So like you can get smarter by reading every book ever written by a billionaire. That's what I'm trying to do right now. There's 240 of them, but you can also get smarter just by meeting with interesting people and hearing from, 100 plus speakers on stage over a few days,
Yeah, that's incredible. Awesome. Yeah, I did hear about the hard money loans.
Yeah.
That, now that I think about it. So that's great. So let's take a couple, last minutes here to talk about what you guys offer at Family Office and Investor Club.
Sure.
Just want the people to know exactly what it is and how
Yeah.
they can get involved if they want to.
Yeah, sure. Happy to. So I started it in 2007. We're an investor club, a community. It's very different than going to a conference where you're going to pay $2,800 to go to one event that lasts a couple of days. We offer 16 in-person events a year, and we offer events in New York, South Florida, Beverly Hills, Hawaii, and then Singapore is starting soon. And so most of our members come to like 3 to 5 events a year in person. They'll stream a couple of events. If you can't make it, your business partner can come under your membership, or someone on your team could come instead of you to some of the events as needed due to scheduling conflicts, etc. But we're in these different parts of the US, so it's relatively easy for you to come to the meetings. We start at 10 a.m. and we have 2 types of events. We do 4 or 5 investor summits a year, and those have 500 people at them, 100 plus speakers on stage. And then we do 10 masterminds a year. And those are one day instead of 3. They're smaller, small group exercises, worksheets, and we're talking about strategies throughout the whole day and really downloading to you what we've learned while running our investor club the last 17 years. So there's a couple of places to go. If you are raising capital for real estate, then go to familyoffices.com. And you can see the membership application at the top of the page. You can also see our in-person events coming up. And would love to discuss that with you. If you're an investor, you can get registered with us by going to investorclub.com and filling out that registration form there. And we'll be happy to share with you the investor resources we have. We have a ton of things we provide for free to investors to help them with either creating their family office or just investing more effectively or improving their due diligence. So those are the 2 best places, going to familyoffices.com or investorclub.com.
Okay, incredible. Well, thank you so much. Lastly, if you were, to have people take just one action after listening to this episode, what should it be?
I think the one action would be to ask yourself, is what I'm doing unique enough that when people hear it, they lean forward and say, wow, I've never heard of someone doing that, or that's amazing. That seems like something I should be doing, or they instantly lean forward and have that gut reaction. And that's based off of everything I've learned while reading these billionaire books. So I'd also encourage you just to check out more of the billionaire books. Just shoot me an email if anybody wants the list of the 240 billionaire books out there. It's just richard@investorclub.com.
Awesome. Well, Richard, thank you so much. We appreciate you having you on, and we look forward to having you on in the future.
Awesome. Appreciate you having me here. Take care.
Thank you, Richard.